Hello and welcome to the Stock Planner channel. Today I would like to talk about three technical stocks to add to your watch list. These are long plays, 3 months out, but you must watch for a pullback. The tech stocks had a strong week. Before we go and do this analysis, I want to tell you that Stock Planner channel is a education channel where swing trading tends to be boring and slow. My personal goal is only 6% per quarter. And if you listen to the hype on day trading, you can make 6% a day or $100. I don't believe in the hype. I believe have a simple plan, a good watch list of stocks that you know and love. You practice good risk management where you win more than you lose when you lose, and that you have a winning system even if you only win 50% of the time. You must have good mental capacity. In other words, have a mindset that you're willing to lose, and confidence and determination, and you must practice your trade, even if it's only paper trading. And you must do your own due diligence. Never listen to anybody on the internet. Just do it yourself. And once you learn it, you have a money stream, income stream. Let's get started. Looking at Simply Wall Street, over the last 7 days, the market has risen by 1%, driven by the gains in the information technology sector. That's what we're going to speak about today. There's tech, and this is for the quarter. Tech looked good. Let's see the 7 days. Tech looks good. For the month, tech looks good. As you all know, I work from portfolios, and here is my tech and chip maker portfolio. And there's several. This is actually, I think, 17 or 18 of them. 18. And you're looking for, if you're going to go long, and you think you're in for the long haul, you look for big green snowflakes. You want to have stocks that have risen over the last 7 days. We're looking good. Western Digital didn't. And Brooker. Brooker manufactures and distributes scientific instruments. Looks like it has a pretty good future. So this portfolio as a whole has a pale yellow snowflake. It's healthy, decent future. Several of them have been undervalued, especially the last 6 months. But look at this. If you were going by a 1-year return, that's not really good for tech. Maybe it's hit bottom. And all these industries that I have on my portfolio, look at this as a portfolio, there's very little green, APH. One of the things you can do with this tool, Simply Wall Street, is get portfolio performance calculation, and it's defaulted at 1 year, and the total return for the year. And you see, there's a lot of negatives on that. Interested in the 3 month, and I'm only interested in the total return. And you can easily do this using Google spreadsheets and the Google Finance function. Just put a start date and an end date, and you can calculate this quite easily. Of course, you need a ticker. This report includes dividends. As a swing trader, I'm not interested in dividends that much. ADSK looks promising from a 3-month perspective. AMD looks pretty good. These are negatives. INTC is negative. And another favorite is CRM, 12%. So we'll look at those three. 14% return. 7.31 for AMD, but you have to remember, Nancy Pelosi just passed that bill. Now, she didn't invest in AMD, she invested in NVIDIA, and that NVIDIA's return has not been that great. So I'm looking, when I do a trade, I'm looking 3 months forward, and what we're doing here is looking 3 months backwards, with the hopes that maybe that'll predict what's going forward. It's a start. If a person got an A on the first test, the odds are that he'll get an A on the second test. The person's got a D on the first test. Looks like they're going to get a D or a C maybe on the second test. Very little chance of getting an A. So in some ways, the past does predict the future, but in the stock market, the only thing you can rely on is trends. And these stocks, you'll see in a minute when I look at the chart, that these stocks tend to have went like this and are reversing. Well, the first stock we're looking at is Autodesk, ticker symbol ADSK. It's a cloud-based software company for development and design used in civil engineering and other engineering functions, transportation, environmental projects. Sounds like a selected or selective audience. Anyway, it's trading at 25%, 26% below the estimate of fair value based on free cash flow. That's based on the fact that you have money to invest in your business. Earnings are forecast to grow. That's good. So it's going to go, the future looks bright for earnings, 31%. It's a healthy company. That means it's profitable. The past, there's some issues with the past, and it pays no dividend. The competitors, and I'm not familiar with those. The chart, down, down, down. Is it going to reverse here? According to Seeking Alpha, they think Autodesk is poised for a buy. Again, we're looking at the technology sector, ADSK. This is TradingView, ADSK on the daily time frame, looking at a few months worth of data, back to April. The FinViz analysts have this ranking as a buy, and a target price of 247. Let's just guesstimate right about there, 247. Nice run up. And by the way, this is a zigzag indicator. It puts the tops and bottoms. You can only use it as a visual indicator because the reason why it's perfect is it looks to the future and only puts these lines when it knows that's a sure thing. So it found a bottom here and a bottom here. And if we're optimistic about Autodesk, you would try to find other indicators to do that job. Let's just say that we'll use the RSI, and I always like to do with the MACD when it's below the zero. In this case, it is right here. So you would take this one, and this one, and this one, and maybe this one, but that's right here. It's not. And you can use the stochastic RSI as triggers too. You get a lot more singles with that. So that would have predicted that little run, that nice run, this nice run, this one too, after the pullback. But right now, the RSI is above the 30. It hasn't come around. And if it does come around, and the MACD is above the zero, that's the time when you look for short. Is this going to have a pullback? Wait a minute, I want to go long. I'm optimistic on this over the next 3 months. But the signals and the indicators are saying, hey, this is not the time to buy. The time to buy was back here. You missed it. So, no problem. Go down to the RSI. Set an alert on RSI. When the RSI is crossing, you want to do a buy when it's crossing the 30, crossing from below up, crossing up. Notify on my cell phone and wait. I think this is a buy, but let's look for a little pullback. What do you think? Looking at Options AI at Autodesk, which is currently trading at 221, they're saying the 3-month move is 13%. And by the way, I'm going to leave that cat out of the bag. I'm not going to go back to this chart. This is based on options, interest, time, volatility, a lot of other factors, the geeks. And they use that to predict how much the market is saying that Autodesk is going to move. And it says it's going to move 13%. The only fortunate thing about this is it doesn't tell you what direction. It can move one way or the other. In our case, we just seen that it looks like it might be a little pullback. So maybe the trend is down, at least for the next week or two, for a pullback. So it might go down between 3 and 9%. Anyway, we're going to wait for a pullback. 13% expect to move, and I'm going to let the cat out of the bag again. We're going to look at AMD next and Salesforce. And they have 3-month expect to move of 14% and 12%. What we're looking for is some numbers that are greater than 6%, because our goal as a swing trader is very, very low. We're looking for 6% over a 3-month period, a quarter, which gives us about 24% annual APR, which is better than Warren Buffett. Better than Warren Buffett's doing right at the moment. Now, the advantage he has is he's done it for a long time and he's consistent. Anyway, plugging that 13% for Autodesk, we can come up and compute our high strike and a low strike based on where it's at. If it goes up, it should go up to 250. And remember, FinViz says it was going to be 247 or as low as 192, somewhere in there, which is what I think a pullback could and then go up. Anyway, we're going to wait for this RSI to come back around. And if you pick the right direction and you've invested $1,000 for this 3-month based on this expected move, you'd make yourself $130, which is a 13% times 4. That's 52%. That's twice what Warren Buffett does. Sweet. The next technical company is AMD, Advanced Micro Devices, chip maker. The 86 microprocessors are AMD, gaming, technology, Ryzen, healthy company, bright future, undervalued. Undervalued by 36%. Expected to grow by 27% per year. That's sweet. Profit margins are a little lower than last year. That's not good. Then that might be some issues with the shipping, supply. Competitors, of course, I've heard about all of these. Downslide, looked like a bit of a pullback. Second quarter earnings missed. The revenue is in line with analyst estimates and expectations. Earnings per share missed. But this is nice. 15% last year, and it's supposed to grow 29%. And we have the Pelosi chip maker bill. Again, AMD technology, semiconductors, target price of 124. Analyst ranking neutral at the moment. This yellow line was a prediction back here, and I thought that AMD was going to be slow grind down. I still think that. And if you look at the top here and draw that same line, it's the same, almost the same angle. We had a crossover here. I'm going to turn that line off. 124 is up in here. RSI here, somewhere in there, somewhere in here. And then if you go the other way, RSI is saying it might go down. Stochastic is saying it's going down, and the MACD is above the zero line. So again, I'm going to wait for a pullback here and set an alert. So with a move expectation of 14.8, we have an up or top at 117, somewhere in this area here, and a low strike at 87, somewhere in there. Again, we're looking for a pullback based on the indicators. Earnings we missed. The move, expected move calculates to be about $15. $15 either way. We don't know which way. But if you pick the right direction and took $1,000, you'd be able to buy 8, 10, 12 of these shares. Put about $150 in your pocket, which is 14 or 15%, which is nearly 16%, 60%. Is it going up from here or down? Is it going to be a slow grind down like I thought? Or are we going to reverse and go to the moon from here? I'm going to set alert and wait for a pullback. Let's go on to the next one. The last stock we look at today is Salesforce, ticker symbol CRM. And this company provides proprietary customer service software. It's cloud-based and designed for the enterprise, trading at 36% below its fair value. And earnings are forecast to grow by a whopping 40%. This is a healthy company, future looks bright, and has value or is undervalued. No dividend, and it's a fairly new company. These are the competitors, and again, you see the same thing that you've seen with the other two softwares. You see this technology drop, and now it's leveling off and trying to come back. It's reporting earnings on the 24th of August, a couple of weeks away. Salesforce, the good value, and is recession resistant. That's because it's proprietary nature of the software. Once you're in, you're in. You can't, if you've started building applications around it and have a lot of money invested, it's hard to make a change to something else. This company has a strong balance sheet and a following. Again, it's not easy to get out once you're in. Technology, software, application, target price 244. FinBiz has a ranking of buy. Well, you see that drop, and we see this rise the last 2 or 3 weeks. Earnings is somewhere in August. 244 is up there. RSI is above the 70, trying to come around. The MAC is above the zero line. That's a sign of time when I start looking for shorts, reversals. And the stochastic is above its 80. Hasn't come back around. The zigzag doesn't know what it's doing. You know, this is the perfect indicator. It knows what it's doing by looking at the future data, but right now it decides they don't know what it's doing. Will it go up or go back down? Move expectation of 12% gives a high strike of 213, somewhere in there, and a low strike of 166. I'm guessing around there. So is it going to reach that one or that one? And I think we're going to have a bit of a pullback till there. Earnings. But if you could pick the right direction now, and with that 12% expected move, in a share price of about $200, you could buy 5 shares. And if you did that, invested $1,000, and it did move, you'd have $123 in your pocket. But that's 12%. That's better than our 6% goal. But the APR, if you could do that 4 times, you'd have 50%. That's sweet. Again, we're going to set an alert where the RSI is crossing up over the 30, and I'll have it sent to my cell phone. Again, I'm going to wait till the RSI goes below the 30 and comes back around, and then go long. I do not want to go short because I'm not sure it's going to pull back. Some people say this is a double bottom and this is the bottom of the market and we're going to go to the moon from here. Let me try to summarize. We looked at 3 stocks: Autodesk, AMD, and CRM, Salesforce. We looked at 3 months out and got the expected move 3 months out. And the reason why I do that a lot is I'm going to do options. I'm not going to actually buy the stocks or short the stocks. I'm going to use options. And we're shooting for something better than 6% quarter. That's our goal. Or 24% APR. 24. Knowing that Warren Buffett tries to do around 20. I think he's getting to about 18. Now, when I usually play the options, I usually try to shoot for the moon at 20%. 20% and a stop loss of 8%. And then, using simple figures of about $1,000. If you want to invest more, just use multiples of 1,000. Anyway, we have the expected moves in this case. And what we're going to do is get out when it hits the expected move. So, if you invested $1,000 and you expect a move of 13%, well, that's easy to figure out. $1,000, that's $130. And likewise, 8% on 1,000 is $80. And then get this numbers. And they should be the same all the way because you're taking a stop loss of $1,000. And these are the win amounts. And then using these, once you have the win amounts, if all 3 were winners, you'd end up with about $400 in your pocket, which is 13% profit. That's better than your 6%. That's our goal, 6%. If you had only 2 winners out of your 3, you'd have $180 in your pocket, which is your 6%. That's what we need. So to get our 6%, we need 2 winners and 1 loss. But if you only got 1 winner, you'd end up with losing about $30. Well, you should be able to do better than that, just 1% of your money. And if they're all losers, this is what you'd be losing, about $240, $250. That's not too much risk. With this stop loss and this win rate, you only need to win 40% of the time. With the current expected moves, you really only have to win about 50% of the time. That's a coin toss. But if you can do better, you got money. At 50% of the time, you still have a profitable system using these win risk-reward type ratio. Salesforce going up, going down. See, it's been hanging in this area here. AMD, are we coming to pullback? The indicators say it should. Autodesk, are we going up in this environment? Or is it coming back around for a pullback and then go up? In all 3 of these stocks, I put an alert. So when the RSI comes back around, that's when I'll go ahead and go long. These stocks are worth putting on your watch list. My background is technical. My background is software and development, and I like technical stocks. But I think I'll wait. On my watch list, I suggest you put it on yours. I suggest you have a watch list or a portfolio of stocks, biotech, tech, healthcare, retail. Not too many in each one. You should know a little bit of each one. I think next week's going to be exciting. Don't take yourself too seriously. Relax. You don't have to trade if you don't want to. This might be a good time to paper trade. We'll catch you on the flip.